got out of his position and stabbed himself in the arm with a pen. His clerk goes to pull the pen out and blood just starts shooting all over. Did it again and again. So I lost $90,000 between the age of 18 to 22. You have to dilute these things like FOMO, dilute the power it has on you. Like, who cares? Miss a trade. Let it go. Paper trade. Well, no, if I paper trade, I'm going to miss that trade. Yeah, but who cares? Always trade for tomorrow. Whatever you do today, don't let whatever you do today keep you from trading tomorrow.
What up, traders? Today, I've got a very, very special interview. I'm sitting down with the CEO of Topstep himself. MP is in the building to chat all things Topstep, all things futures trading. He shares some incredible stories. You're going to have to wait till the end to hear some of them about his time on the trading floor. We talk entrepreneurial ventures and starting Topstep and a little bit about his background and how he got into trading. It's an incredible value-packed episode that I know all of you guys are going to love, especially as people are transitioning from CFDs into futures. And some of you I know are trading both. You're going to love this episode. So stay through till the end. Make sure you subscribe so you don't miss future episodes of our podcast, The Day Trading Show. And thank you as always for being here. And also shout out to our sponsors, Topstep and TradeZella. Thank you guys for being sponsors of this episode and making this happen. So enough out of me. Let's talk to Michael. All right, boys, I'm finally excited to share this information. The free futures course that I've been working on the last few months is finally ready for you. There's a link in the description to grab this course. Again, it is totally free. All I ask is that you leave me a review. I can see everybody that takes the free course. If you don't leave me a review, I'm gonna come kicking your door down and asking you for that review. Because in my opinion, and this is what I'm hearing from other people, you're gonna watch this and you're gonna say, why is he giving this information out for free? Well, I'm giving you the strategy that has helped me and other traders in our group get funded and get paid out as futures traders because I don't believe strategy is the only component to getting paid out. It is an important factor in your overall success, but it is not the only factor. And I think that out of all the factors that lead into successful trading, strategy should be the one that you almost would say is the most simple. So I want to give you a simple strategy that's proven to work not just for me, but for other traders. And then I want to help you push yourself to get funded and get paid out. And that's what we're going to do with this free course. So check it out. There's a link down there. Just make sure if you watch it, you leave me a review because I'll come asking you for it if you don't. I really appreciate all the feedback, all the attention you guys always give me. I'm just here to help you guys make more money as much as I can. So enjoy the course and now enjoy the rest of the video. I'm really excited for this conversation because as we were just saying before we started the stream here, we have a lot of guys from my audience that have been trading Forex, trading CFDs, now transitioning into futures. And Topstep is, though, in my opinion, the most well-known firm in the futures funding space, almost more well-known in some sense, especially to the younger generation. It's more well-known than brokerages even, I think. So you guys are booming. And I know your business must be taken off right now. So it's a really good time to sit with you. But for people that don't know you, Mike, can you give us your story of like how you got into trading? Not even, let's just save the Topstep part of it, but how'd you get into trading back in the day to begin with?
Well, so I'm from Nebraska and from a small town, 3,500 people. Farmers around the community, they would watch commodity prices. I'd go into my buddy's parents' home. They'd have corn prices on there on the old DOS system back in 96, 95 or whatever. And I was, I don't even know, I was 14, 15, 16 around there. I'm 45. So I've been doing one thing my whole entire life is trading, but it all started by looking at corn prices and coming into their kitchen that would be sitting there, their terminal and all that kind of stuff. So I started watching corn prices and started understanding that. Then I watched a movie called Trading Places, and it's where Dan Aykroyd and Eddie Murphy, and then like they became traders, and they're trading in the trading pit at the very end of the movie. And I remember the craziness of the trading pit. I'm like, that is the coolest thing ever. And then at the very end, the Duke brothers like fell down in a heart attack. One of them did because he owed $300 million in a margin call. And then at the very end, Dan Aykroyd and Eddie Murphy are cheersing on a beach in a boat to you guys got to watch the movie. It's great. And they're saying, congratulations to each other. And I'm like, what happened? How did one person owe money and the other looks like they got instantly, wealthy on this trading journey that they were on in this movie? So I talked to my uncle Gary, who worked at Merrill Lynch, really quickly, and said, hey, what about this? And tell me about trading. He's like, well, Michael, time is irrelevant in the world of trading. You can make and lose as much money as you can kind of fathom, or you have. And the only thing I heard was make. and I didn't understand, look at the downside. So I quickly put $30,000 because I had a vending company that I started at the age of like 15. I had 80 accounts in Nebraska. You're talking about an entrepreneur, a kid that didn't have any bills and was, bringing in $1,000 to $2,000 a week to myself. And I was 17 years old. And so I had this money so I put it in a stock, got smoked on a pump and dump in 1997. I paused, regrouped, realized I lost all that money, did it again and again. So I lost $90,000 between the age of 18 to 22. I graduated from college and I still wanted to be a trader. And I went to Chicago and they said, hey, we're going to get you an interview. But you don't really, it doesn't really matter how you trade in the past. They're going to talk to you about your future. Okay, cool. So I get there and they said, hey, we're going to have you trade on a trading simulator. We like the fact that you traded in the past, but we don't really care about any of that. We want to see you trade on a real-time simulator. And I'm like, well, hold on, why? And they're like, well, we're going to see how you trade. And I'm like, you're only going to trade a one line. You're only have a $300 daily loss limit. So I'm sitting across the desk from this guy who says, we're going to hire you, but we're not going to pay you. And I remember going, I traded a lot bigger before, and you guys are only going to you're going to put me on a simulator in a one lot. He's like, there's a reason why you're sitting here at the desk. He's like, you probably didn't find success on your own, did you? And I said, no, to the tune of almost $100,000. He's like, yeah. He's like, if you can't become a professional athlete here in Chicago, you can develop into a professional trader, and we're going to help you do that.
Hey traders, I just want to give a shout out to today's sponsor. Topstep is a US-based futures funding firm. It's actually one of the oldest funding firms in the entire industry, not just in the US, in the entire world. If you're looking to get funded and trade futures, which is something I recommend you do, I recommend it strongly. Use the link down in the description. Topstep and I are going to do a lot of work together over the next few months, and I want to get you integrated into their ecosystem. Their challenges are cheap. The rules make sense. They're easy to pass, and you can get paid out in your XFA account, even though you're still trading in a simulated environment. If you don't know anything about Topstep, again, just use that link, go read all their FAQs, do a bunch of research, but everyone that we have sent from the CFD world over to the futures world, we've pushed them to Topstep and nobody is complaining. So if you're not already in a futures challenge, or maybe you're ready to diversify and trade with a different firm, use my link down in the description. That supports me and the channel, and I really appreciate that. So thank you for being a listener. Thank you to Topstep, and let's get back to the video.
You're going to start on a simulator, and you're going to respect the downside with a $300 daily loss limit, without a $30,000 or without a whatever. And you're going to respect downside. You're going to be thinking about that first. So I found the importance of a simulator, and that took me getting completely baptized by serious fire or paying a high tuition to kind of understand the markets. But I didn't ever understand the markets because I was always chasing, your losses to get you back up. But then they put me on a simulator, found the importance. I found my strategy. I found my discipline. I managed my emotions better so I could control my behaviors, which is really what we're looking to do here, is manage emotions, not really control them, and then get your better habits and behaviors start to form. And he did that, and I did that on a trading simulator. And then I flipped the switch. They flipped the switch. They gave me a 60-40 profit split, 60% to me, 40 to them. I didn't have to put any money up. I started trading well, took all the money out of that account, bought a seat on the trading floor, Chicago Board of Trade, went into the Dow futures pit in 2002, when the Dow futures just started, and started trading in the pits. Now with that understanding and respect for risk, those skills developed, the better habits are formed. And that's when I turned from a retail trader into a professional trader. And from there, it just kept growing. I started at the top. I started at the bottom step of the trading pit, and in the trading pits in Chicago, and a lot of any trading pits, is the top step is reserved for the biggest and best traders. It's where the most volume happens. It's where the size traders trade. You get the best line of sight. You can see across the pit, and you can see everybody down at the bottom of the pit. So I did that for 2002. I went all the way to 2008. I had my best trading year because that was a financial crisis time, and traders should make money when volatility picks up. And I did it really well that year. And I was I wasn't $1 million a year trader, but I was a solid mid figure year trader. And as a 25, 6, 7, 8, 9, 30-year-old doing that, I started Patak Trading Partners, a prop firm, to do the exact same path, give other people a chance, see how they trade, and then I'm going to back them while I'm still trading. And that's really where the whole funding model started. Nobody was doing this globally. You had to go to Chicago like I had to do after college, or you had to have rich uncle or nepotism or pedigree or wherever to get your name chosen to be sitting at a desk, still having to then prove yourself that you could trade. So really that's my retail to professional trading journey. And then when I got into being an owner of a prop firm and also a trader at the same time, and that was in 2010. And then things just really took off after that. That's where Topstep came out of. And the industry was formed, the funding industry was formed in 2010. And Topstep and I was a founder or pioneer of the funding industry. As far as prop, you can always go to a prop firm again, but this is like stay wherever you are. If you're in India, great. If you're in Taiwan, great. If you're just show us you could trade. I don't care what your background is or anything like that. It's a prove it business anyway. And the playing field is pretty level now that electronic trading's here. So who cares about rich uncle or pedigree or nepotism or anything like that? It's about prove it. And that model really was needed in the space because before that, Austin, as you know, you could go to the markets or you could go to the brokerage firm, open up your own personal brokerage account, maybe the kid's college fund or some money you have saved on the side. And then typically those accounts get blown out because you don't have experience. So there's really no experiential learning platform that's in real time. And then experiential learning platform that's in real time that also evaluates you. And if you're trading well, offers you the opportunity to trade prop firm money. So that's really the whole retail to professional trader. And then that's when the funding industry kind of got started and kicked off.
So I love that you laid that out so perfectly. You did that very well. I got a couple of points there that I want to go back to. You said in trading, time is irrelevant. Can we elaborate on that a little bit?
Well, we all know that if you put a position on, you can instantly be down or instantly be up. And if it's a vicious enough move, that could be really great and euphoric, or it could be you're completely blown out and you lost your house and home. And yes, you can lose your house and home because your account can go debit and it can go negative. And we had to guarantee our accounts by putting collateral up or something of that nature. So there's always that. So time is irrelevant when it comes to trading, even though we're watching the markets. But that's the dangerous part about trading is getting comfortable understanding these vicious moves, whether they're good or bad. You know, you could have a good move or you had a move work right in your favor, be instantly in the money, deep in the money, and think you're the greatest trader ever. And the next one could go the exactly opposite or vice versa. So it's the screen time, and getting a lot of screen time is very important. But in general, trading itself, you can make and lose in no time at all.
Yeah, great answer.
Which is also, Austin, as you know, a big driver of why people come into the world of trading is because of that. Yeah,
absolutely. So it's a double edge. Absolutely. Why go into the NASDAQ pit? Why would, like, you were doing well on your own, it sounded like. Why did you purchase the seat on the floor? You know, someone from my generation, I'm a little younger than you, I wouldn't understand that. Like, why would you not want to continue to do this on your own? What would be the benefits of being on the floor?
The same benefit, I think, that communities are formed. You have other people like-minded to be around. Look, trading, when I first started trading, I lost my first $30,000 real money trading account at Ameritrade. It wasn't even called TD Ameritrade at the time. It was Ameritrade out of Omaha. I kept giving them checks. They had no problem opening that, but I had no support system. I had nobody to talk to. The pump and dump stock, penny stock that I got into was because I went into a chat room and everybody was saying, I just followed them. So being around professionals, being around people that respected trading and wanted to develop into be the best trader. They knew shortcuts didn't exist as far as the top step traders, the ones that have been there the longest. I wanted to really be around that. So I had this mad respect for anybody on the trading floor. And you could trade electronically on the trading floor. And I was an electronic trader first. And I said, hey, why don't I go to the trading floor? Why don't I buy a seat on the floor? Why don't I trade there every day and then be around Tim and Cedar and Opie and these other guys that I met that were kind of very close to me. And we used to have to wear ties on the trading floor. Here's like my old badge. And if you could touch them with your tie, they were considered your friend. So you'd stand in the exact same spot every single day in the trading pit. So that camaraderie, that, hey, Chris, what are you seeing? And he's like, well, I'm seeing this, and that. And then, hey, Tim, what do you? And then he said, and then you're discussing the markets, formulating opinions, rechecking checks and balances. You're challenging your own thought consistently all day long. And to me, that is paramount to have, to stay in tune with the markets, to keep your learning curve always as short as possible, because we're always learning, and to be around other traders. That was the reason why. There's no chance I would have went back to a personal office or something away from other traders. And that's why I think community, having community is such a big thing.
I love that answer. Great answer. When you say in that, you're like, look at the board, look at the board. Would you describe the trading in the pit as more momentum trading, where you're seeing, okay, everyone's selling, let's get into sells, let's start selling? Or is it something different than that? Because it seems like a lot of the pit trading was momentum based, where you're trying to feel the market. There's no chart, there's no technical analysis that's going on. Am I correct?
Yes. And part of it, no. Momentum trading, breakouts, and a lot of traders in the pit would keep things in ranges. They were range bound traders. So when things would extend out, they would be offering the market down to put it back into the range, because markets are stay in ranges a lot more than they do stay in a breakout or trying to. They'll break out, but then they'll go back into a range. And so there's what I learned. And as a new trader, I was always into breakouts. Okay, break it out. Now let's play this momentum. And the traders that I was around were always range bound. And it kind of really helped me. Range bound is pretty boring, because, it's not exciting. It's slow turns over. But by the end of the day, it's just this range bound. And some people are like, oh, the day was a shitty day to trade. But actually, range bound traders crushed it that day. And breakout traders got crushed, because every time I went to break out, I did a little head fake to the upside. Yep. And they get stopped. And then, yes. So that's kind of where I learned the different styles and how professionals played the markets differently.
That's a great answer. Do you know Chris Cady? Are you familiar with Chris?
Chris Cady, no.
So he's another guest I've had on the podcast recently. He's a futures trader, been trading on Wall Street since the 80s. And he said that same thing, that markets move in short spurts. I think he said 80-20. And then the rest of the time it's in a range. So 20% of the time it'll make its move, 80% of the time it's in a range. When you start to hear that from more experienced guys like yourself and like him, it makes a guy like me think, we should be trying to find those levels then. That's why you hear these guys so hot on their levels, because those are the ranges where the markets are being made and that the markets will almost be brought back to. Is that fair?
That's fair. And then you talked about charting. On the trading floor, we didn't have charts. Well, we did later on, like I'm talking like in 02, but starting in 04, 5, 6, you have a little tablet, and that's where you'd get in and out of your trades. And it was really cool. the DOM. We called it the ladder, but it's the DOM, the depth of market. And that's where you get in and out. You would have charts printed in your pocket, like a 30-minute chart. You go print it, mark it up where you want it. But really, people, what they did is in the top thing of their trading jacket, they would pass around levels. So everybody passed around levels. And then you'd weight the levels of how the markets respected them or were played from the past. So the levels were really important. Market profile and things of that nature. I had guys around me that did that. So you get information from them. But true chartist, true technical analysis, you didn't really find those in the trading pits that often. Now, of course, nowadays it's probably the only thing that is probably the main foundation piece of a strategy, is to be built with technical analysis as a guiding light. But in the pits, it wasn't like that. It was a lot of range bound trading, and it was a lot of understanding the players that would come in that would try to move the volume that they were trying to do, and paper. We call it paper, institutional money, and what they were doing.
Interesting. Can you kind of fast forward real fast? How did it end? Like, are people still in the pits trading today, or did it all move to data centers and algos and it's not anything anymore? What's up, boys? Before we get going with the rest of this episode, I've got to give a shout out to TradeZella. You guys know they've been a sponsor of the podcast before, but now they've actually opened up another discount code for you guys. So TradeZella is a trade tracking software that allows you to pinpoint the areas of your trading that are holding you back, your biggest weaknesses. But more than just thinking about the vagueness of like, man, I'm just taking too many trades, it actually will give you the specific data behind those mistakes so you know what to improve. And again, I could talk about this for an hour, but the new discount that they just opened up for everybody is a yearly discount of 20%, which is huge. They normally don't do sales at all. So now, if you use the link in the description, you can take 10% off your monthly membership using the code ASFX10, or take 20% off your yearly membership with the code ASFX20. Again, the codes and the link is down in the description. Make sure you check it out. If you're really taking your trading seriously, if you want to be a professional trader like myself and the guests that I have on this show, you've got to use TradeZella. It is a no-brainer. I love Umar. I love their team. This has nothing to do with that. Their software is incredible. It's hands down the most user-friendly, easy to access, easy to upload. Everything is super smooth. The only thing is you not wanting to confront your losses. This makes you do it. This makes you confront those weaknesses, and it helps you turn them into strengths. So check it out. Use the link in the codes down below. Now let's get back to the video.
Well, I had a photo shoot that I did for Topstep. We need for like our PR stuff that we do and articles, and they're like, you need new headshots, you need all this. So I got into the old trading floor to do some of the pictures. There's nothing there, but there's a couple wall boards that are still lit from like 4 years ago when even longer, I think, same like contract month contract months that go out. They're still sitting on the screen from the day that they stopped, but they just keep it lit.
That's awesome.
There's nothing really there anymore except a euro dollar options pit. There's just one pit because I think they're still making better markets on euro dollar options than you could find on the screen. That's really what it was. Where can you find better markets? And better markets means bid offer spread, liquidity, and transparency. I mean, online trade, what we're seeing right now, what everybody trades on right now. So there's really nothing down there anymore. It's very nostalgic and cool.
Yeah.
But, and I got my picture on there, so we'll be able to use that.
That's all that it is. Okay. That's what I figured. I figured it had all been, kind of pushed out. Same thing like on the New York Stock Exchange. Nothing really goes on there, and it's a PR thing. Okay. So let's fast forward a little bit to the Topstep side of things. So you start the business in 2010, pioneering the funding industry. Can you just talk about, because I haven't heard you talk about it, and as much as you want to share, what were some of the initial roadblocks, regulatory roadblocks, people hating on the idea? What was some of the pushback that you got that you had to kind of fight your way through to make it successful?
4 years of pushback. So when we say we create a space, we literally create a space. You're a scam. This is stupid. Why am I trading on sim? Why do I have to follow your stupid rules? Blah, blah, blah. That was the resounding start, because like, again, the sim environment was always used. That's why they call it demo trading. You're going to demo a platform. You're going to, and that really was the use of real-time simulated world, is demo the platform, didn't deposit money in your brokerage account, and then you're off to the races. Well, no, you're missing a huge component here. So that like building it upon the sim and monetizing the world of sim in a way that people took it serious, because they had a little skin in the game, and they'd be evaluated on a real-time sim experience. And then if they failed, they're not losing their kids' college fund. They're not losing $100,000 like I did. They're finding out very quickly through quick real-time feedback if that trade idea worked or not. And so the beginning was like really the rules. We had a lot more rules. Average winner's got to be greater than average loser. Winning percentage got to be greater than this. And that's what we were honed in. And we had a big group of core, serious, strong traders. But then as that grew, other people that were hobbyists, or, I've always wanted to trade, or I did trading, but I lost my kids' college fund, and my wife will divorce me if she says I go back to the market. So how do I do this in a more safe environment? And then Topstep kept becoming like an opportunity for them that was a low risk, low barrier to keep moving their game along. And that's really the beginning, was getting over those, sharing with people the value of learning safely and the importance of learning safely on a trading simulator, and then getting yourself in a better position, whether we're backing you because you're trading really well, Austin, or Austin now wants to go to open up a personal brokerage account or redeposit into your personal brokerage account that you lost money in, because now you're more confident and you're in a better spot. That didn't exist prior to that. And that really was the big thing that we had to, and I had to keep beating into the communities ahead of this. There's value here. Like, yeah, go trade it. There'd be people that would say, I'm going to go trade my personal brokerage account because I'm not going to waste time being evaluated. Like, well, If you're looking for funding, there's a reason, again, just like the guy said to me, there's a reason why you're coming to look for funding, because it's not working out there. So quit risking so much of your own capital and learn safely. Let us back you, or at least learn safely, dilute the power of FOMO and instill patience and discipline principles on a real-time sim experience by getting that screen time, those reps. And then now you're ready for pro ball. Now you can go out there, trade your own money or trade our money.
Love that. Why have you guys not stepped into the education realm? I think a lot of people would want to learn from you specifically, even. Why have you guys not dipped the toe there? Am I maybe touching on something that might be coming in the future? Have you ever thought about that?
Well, a couple things. So we had Topstep Trader at the time. We were Topstep Trader, and then we're Topstep now. Um, we had Topstep University. That's great. People do that, but your greatest teacher is experience. Like the markets, you have to experience the different conditions that the markets throw at you, the movements, how things set up, how you handle a losing day, how you handle a winning day. Even if it's on a real-time sim, you're going to feel those emotions, especially if you're being evaluated for funding. You're going to feel those, and you need that person to feel that feeling over or watching a video or reading a book and all that kind of stuff. Look, I went to Online Trading Academy out in Irvine, California in 1997, and I paid $2,500 for a 1-week support and resistance course. Never traded, never did anything, but the guy had a big screen up there, and here's support line, here's resistance line. Now you can get that stuff for free, of course, but the greatest teacher is experience, is getting your hands in there and experience it, because then you know what to do when it does what it's going to do that you've experienced in the past, or at least you're a little bit more conditioned and pre-qualified, I should say, to handle different market states.
It's a great
So
answer. And
I would say, Austin, we are in education. We're just an experiential education.
That's what I was going to say. It's just not course based. Exactly.
Yep.
And, I
Yep.
totally agree with you. And I have multiple courses I've made and sold. And the more that time goes on, the more I think I should just put them for free. I just did this quick little futures one since I've gotten funded and had some success. And I did a free one because I think, like you said, experience is the best teacher. So really what you guys need is an all access to you, a week with you, 50 grand, something like that, where they can sit and trade with you and feel those emotions and feel that experience you're talking, but with you guiding them, saying, hey man, this is part of the game. That's okay to feel that way here. Oh, this is actually where you want to stop yourself at this, just having that guidance, I think, with the experience is a little bit of a shortcut too. Okay. So I like that answer.
You're 100% correct. You need to have some feedback loop that's not only from yourself, because you're going to, unless you're journaling and being really, really good about it.
But even then,
trading,
you need somebody to give you you need somebody to critique you. You need the critical feedback. I was talking to somebody about this, like, on the social media nowadays, everybody, when they disagree with you, what do? They just block you. And all of a sudden, after you've blocked everybody, what happens? You create an ecosystem of people that just yes you, no critical feedback. Same thing with your trading. If you just push everybody out and exile everybody and have no community, you'll never grow. You'll never get feedback that'll challenge you to push you. And I think, like, you would probably agree with this. I know John on stream yesterday agreed with me. This is about surviving, right? Like, it's not about this quick one get rich quick, one hit wonder kind of thing. John said it. He's like, I'm not a futures trader. I'm a futures survivor. What do you think about that?
100%. That's that downside, focusing on your downside, focusing on respecting risk and being patient, all that. When I first started, like I said, I focused on the upside. How much can I make? Okay, I didn't hear how much. It's the preservation of capital. It's all these kind of things. So you're always. We have a big line, and I have it on the wall over here. Always trade for tomorrow. Whatever you do today, don't let whatever you do today keep you from trading tomorrow. So you're always looking to survive. And people are like, oh, I want to come in here and make money. Yeah, that's a byproduct of being a good trader, is making money. Yes. But you should really come into here first and see, can you survive? Can you break even? Can you scratch trading? And you're like, that sounds boring. Well, can you do it? Because making money sounds awesome, but can you do that?
If you can't limit your downside, you'll always give back the gains. Always.
You'll always get back the gains. I mean, some of the worst things you could do is make money out of the gate as a new trader, because then you think your God's gift to trading, and you got to break that little, like, so it's really, we always say, learn how to scratch trade for a couple months. If you can scratch trade for a couple months, if you're trading every day, 20 days, let's just say 20 days a month, and you got 40 days under your belt and you are scratched on that account, that's good trading. That's a start of, at least you have a foundation that you can manage your emotions, control your behaviors, and your P&L doesn't slip away from you, whether, or it doesn't start saying, oh, I made money today. Now I'm awesome. Oh, I lost money today. Now I'm going to double down. Now I'm going to cannonball. Now I blew out.
Right.
So that's really, but that also comes with screen time, and
For
screen
sure.
time and focusing on scratch trading to me helps build a foundation. Then of course, risk management rules.
Well, I mean, a lot of people on the initial part of it too will just blow up. So just scratch trading puts you in a separate group of ahead of those people that will just torch the account
100%.
in a single day or two, you know? So
Yeah.
let me ask you a question. When you go back to 1997 and you go back to first getting into trading and really starting to get everything going, what would you tell that version of MP? Is there anything you would say, hey, look out for this? Hey, think about that? Any advice for the younger version of yourself?
Yes, open-minded. I get when the very beginning, you're like, it's going to do this, it's going to do that. The market will do whatever it wants to do. So we have a big thing at Topstep is like, it may do this. I think it might. We never say it will, because like you don't know. And like so the open-minded and having a flexible bias. I do have strong opinions that are weakly held. So I think as a trader, you go into with a strong opinion, but then you're looking to be proven wrong. And then if you are proven wrong, where the information is new in the marketplace, or talking to the other community of traders, and you're like, yeah, okay. And then you can make the decision to get out of that trade wherever it is, maybe because the information. So you're not just feet in concrete. I'm just going to hold my ground, dig my heels in, so to speak. So being open-minded and flexible bias or strong opinions weakly held, or however.
I love that saying.
And yeah, and then just patience and screen time and patience, because if you get this down, kind of like the golf, I'm not very good at golf, but like kind of like golf, it can be with you the rest of your life. And you need to lower your expectations and increase the standards of which you go about becoming a trader that you're trying to be. And that again takes time. It takes patience. You have to dilute these things like FOMO, dilute the power it has on you. Like, who cares? Miss a trade, let it go. Paper trade. Well, no, if I'm paper trade, I'm gonna miss that trade. Yeah, but who cares? Well, then I miss a trade. Well, could be a loser too. So like, let's just play the game of like, let's dilute the power. So now you're always working on little things, because there's a whole psychological, emotional piece of this. There's becoming a consistent, profitable trader that you need to get your head around. So all that being said, 1997, I would say take your time and give yourself a lot of time. Be open-minded, always learn from every day, and small daily improvements add up big time. So at the end of the day, if you didn't make money in your account, at least your think tank should be full, and you're learning and improving for the following day. And if you did make money, great job. Keep learning on leveraging what you did right the following day, and how you can mold and adapt your trading plan and your trading style to the market, because the markets, again, like you say, range bound trade, highly volatile, aren't even moving. You got to just be adapting to everything. So adapt or die is another big thing in
Yeah,
this
I love that
business.
too. I love that.
Yeah.
So let's talk for a second about the relationship with the CME. What has it been like working with them? Because I think what people from my side that are really attracted to the futures market is the great spreads, very tight spreads,
Mhm.
instant execution. And that has to do a lot, I think, with the relationship that you guys have with the CME, where these CFD firms, a lot of them are using sketchy, unregulated brokers with weird pricing. Every asset, they're all the same asset. They're quoting S&P 500, but the price is different. So can you speak on the relationship with the CME and how that has made trading, you know, smooth for traders through Topstep?
I, I think just the CME in general. Look, the futures are kind of well, we've always been told, if people start in equities, then they go into options, and then they may go FX. But then typically, if you're really looking to professionalize your passion of becoming a trader, futures is where that group ends up. And that
Yep.
this is the history of, you talk to brokerages, you talk to people in the space, it goes from, hey, the Jordans are coming out, I'm going to buy Jordans because they're going to go up, but it's already all factored and baked in the price. And then you find out it's not. And, but they all start kind of that route. So futures with the CME is being regulated as being having cool products like the S&P 500. I know there's like the US 500, but that's really just like that's the S&P 500. So like
Yep.
like trade the real S&P 500, trade the real like Dow 30, not the US 30. That's where you're going to get the real prices that everybody's seeing the exact same prices. It's regulated, so there's not smoke and mirrors and pricing and pools and all that kind of stuff in there. And it's more trusted and legitimate in the history of the futures versus others out there. When you're, so I don't know, CME has like been the founding of the kind of the futures market, and Chicago's the founding home of futures, unless you want to go all the way back to the tulip days. But yeah, so this, I don't know, CBOT, the NYMEX, CME, these are all exchanges that are public exchanges that are regulated, that have full transparency, and why not professional institutions trade these? So if you're looking to become a professional trader or aspiring trader, go into the markets that again, the pros are all in, and do your best.
I love that you said the professional word, because I think that's a nice segue to my next question. That was a great answer. A lot of traders, I'll think of like Anthony Crudelli and Pax and these guys that are longtime futures traders, Linda Rashke, successful futures traders. You never hear about big CFD traders. You don't hear about that very often. So I just think that's funny. So next question, since we are speaking
funny,
about, yeah.
Austin,
Go ahead,
funny.
sorry.
Linda's daughter worked at Topstep. She was
Really?
awesome. Yeah, Anthony Crudelli and I are friends. We were just down in Boca at a FIA event, futures industry event. That's where a lot of the big ICE, CME, DAX, or Deutsche, Eurex, I should say, exchanges all were there. And Anthony and I got a chance to catch up. He's a great guy. He's been in the industry forever. Linda is incredible, and her daughter was incredible when Topstep first started. She was helping us out.
I got to get Linda on the show. I just found out from someone that follows her closely. She's in Florida near me. So I'm like, all right, I got to make sure we link up with her. So next time you're down in Boca with Anthony, you guys call me, we'll play golf, and I'll make sure to kick both of your asses. Okay.
You will definitely kick mine. I know that.
I'm not very good either.
So he plays a lot of golf.
He's too good. He's going to kick both of our asses for sure, but we'll share a card. Sure. We'll have fun. So let me go to my my professional question before I forget. A lot of people will push back, I think, in some sense, not push back, but they look down initially on two of the rules specifically, which I think favor professionalism. And I know why you have them in place, but I want to hear it from you. I have my ideas at least. But the consistency rule and the max daily loss rule, two rules that I think are built, you're going to say they're built to keep the trader safe, right? To keep you trading for tomorrow. But also they probably attract the most pushback because, it's people want to YOLO these accounts. They want to try to pass it all in one day. They don't want to hear that they have to have, consistent winning days and things like that. So can you speak on why those two things are in place, the daily loss, max loss rule and the consistency rule?
Well, every trader that is taking it serious and wants to get somewhere in this business should have rules. If you start a business, you have a business plan. If you start trading, you should have a trading plan. And no business plan is the same business plan the day you start, just like no trading plan is the same trading plan the day you start. So you should learn to adapt and grow with it. So you should have rules in there, and you should have downside rules that let you know when you need to shut it off for the day or shut it off completely and reevaluate and regroup. So downside rules, paramount. If you don't have any downside. So max loss limit is kind of a no-brainer. And if you hit your max loss limit, it means something that you're doing is not working. And you should reevaluate. In Topstep, you have a trader dashboard with trade reports that show you your average winners, average losers, consecutive winners. So those are your baseball stats. And if we're playing Moneyball here, you should know your stats, because if every player got up to the plate and swung at pitches that they didn't swing, that they struck out with more often than others, wouldn't that be good to know what pitches those are? So then I could say, hey, Austin, lay off the slider. You're not any good at it, but man, when you hit that 12-6 curve, when you see that coming, that's your pitch, and your stats say it. So understanding your stats, getting in tune with that is really really important to kind of getting you in that position.
Sure. And what about the consistency rule?
Yeah. And then the consistency rule is you got to have consistency. We call them Papa shots, the one that just puts up the big money one day and then they're like, oh, I'm ready. Like, yeah, you just show us a little bit more. And again, back in the day, we used to have many more days that you had to show. We used to have many more rules that you had to do. And as the industry's kind of grown, a lot of folks are like, well, I'm not going to do all that. I want less, less, less. So less rules. So I'm like, okay, in the end, what rules really matter? And we shaved it. What rules really matter? Well, first, the biggest one is at least they're trading in sim. And because sim is where you can learn. So keep them in sim until they get comfortable and confident and performance wise enough to go off on their own or get funded that we're doing that job well, sim environment. Well, what rules should we put on? Well, you have to have a downside rules. Unless you're the Federal Reserve, you don't print money. So you got to have a downside daily loss limit or an account, number. So max loss limit. The other one is you got to show some level of consistency. So the consistency target isn't even a rule because you can't break it. You just need to show some level of consistency. We used to have like, hey, show us 10 days of trading. So people would make money one day and then scratch 9 other days. And you're like, okay, so this is like the evolution of the rules in a way that still does what the spirit of funding traders was in the very beginning when I created the industry was put them in a safe environment, give them guardrails to go down and give them a target to hit, and they earn X or Y, do X, profit X without hitting Y, earn Z. And and that's really the two rules that two guiding lights that we have for traders. And without those, I mean, now you're not really, you're kind of missing a big piece of trading if you don't have a downside rule. And you actually want to show to yourself that you have some level of consistency. So those two are the two that are we're have right now.
It really weeds out the riffraff in the industry too.
Mhm.
You know what I mean? If someone's going to look for a firm that doesn't have a max daily loss and you can torch the whole account in one day, or
Mhm.
they lack these type of professional rules, it almost should make anybody with half a brain question that firm. You know what I mean? When you see
Mhm.
firms like what you guys are doing, so I know that it plays to the trader. And as someone who has now passed a couple of combines with you guys and gone through this process myself, I can speak on it and say like it actually makes you trade more aggressively in taking your profits, cutting your losers quicker. It actually
Yeah.
favors better trading over the long run, I think.
The rules are there to instill discipline. If you know you have a downside rule that will break the account, or you have no rule that won't break the account, which one do you think will help develop guys? Develop takes time, develop into a more professional trader. Because again, the market will go against you and it will go against you and it'll go against you. And the markets can be irrational longer than you can be solvent. So that whole line. So you got to have a downside. So that's a big one that instills discipline. And the whole goal here too, if you're experiential learning, which the spirit of evaluating traders is you're also guiding them towards something that will actually help them create better habits, respect more of the downside, instill a habit, develop a habit, hone a habit while you're creating and developing your trading strategy all at the same time. And to
Yep.
me, that opportunity needs to have some rules around it because you need to be developing while you're doing. And that's a big reason why rules were created. And all trading plans should have some type of rules of which you follow, even if you're not with Topstep.
For sure. I totally agree. What's your morning routine like? I'm curious, Michael. Like, you seem like the kind of guy that's got 18 plates juggling at all times here and you like it like that. So what's a typical day, especially the start of your day like? Because I'm sure people are wondering, like, you're still
Yeah.
trading, you're running Top Step. Like, what's it like?
Yeah. So I start at like 6 in the morning, but I come on the Top Step TV, the pretty much Monday through Friday, for an hour, 2 hours. It's a bell to bell, live streaming, show. I always frame it up like if you were to watch CNBC meets ESPN with a bar stools feel smashed up together, you got Top Step TV.
100%.
It's really tradertainment. So guys like us can go on there, and I've been watching Bloomberg and CNBC and whatever investing media channel since '97. There's never been anything for traders. So and this is focused solely for futures traders. So you can go in there and listen. So that I'm in there, and then right after that ends, I take that trader hat off because I really go in there as a trader and talk with other traders. We have thousands that are in there, and then I take put on the new hat, the CEO hat of Topstep, the founder of Topstep, and we have a team of over 100 people working hard to support our traders, to have the best technology, to be innovative, to be thinking ahead, and to be doing cool stuff. So I am a lot of part of the cool stuff. not really the day to day. So I get to join the teams on the creative side that we're doing some really exciting stuff that we're going to be launching later this year, and next year will be really cool. Just consistently doing that, and then at the end of the day, I go be a dad and try to get out there skiing if I can, and go to bed as early as I can, if
That's awesome.
possible.
Yep, I love it. Can we plug a little bit about what's coming? I know Topstep X is one of those things that you're probably mentioning. Can we talk a little bit? Because people, the most asked thing when I was on Topstep TV the last two times, and they knew that we were doing this interview, the most asked thing said, "Ask MP what's coming. What do we have coming from Topstep?" Because they know you guys see all these other firms and all the
Yep.
CFD drama, so they know you're cooking in the background, and they want
Yep.
something to salivate on.
Okay, so we have a micros and minis equivalent that's always been like a little like people are like, well, you're just tripping us up, or you don't have this. We've always had it because it's technology. Like our tech stack and everything was built in the past without micros. This is before the micro day. So now that will be fixed, and it will be in Topstep X. Topstep X is the newest, most cutting edge futures trading platform. It's very, very cool. And it has trading view charts built into it. It'll allow you to lock yourself out if you're trading well in the day, so you can lock in your profits and deactivate yourself from being able to trade, but still be able to watch the markets. That's a huge anxiety relief for me, because if I'm doing this interview right here, I have one corner on the markets. They're actually over here. And I'll
Yep.
be like, oh, let me put a position on. Let me put it. And,
Ye-
I'm up like $300 right now. So it's like, I don't want to, like, I'm distracted. I'm doing this. This is awesome. But I'll put trades on the site. So this lockout feature is really great. We call it lock it up. And the micros and minis is going to be fixed within Topstep X. And that's going to be here in a couple weeks. We're looking into like a responsible trade copying scale up plan, because we don't feel, I've never been a huge fan of trade copying. Why? Because you can't do it live. Talk to any brokerage firm. You can't open up 10 different brokerage accounts at the same broker, take one lead account and follow it all. This is on all the brokerages I asked. So like, can't do it live. Let's not really condition people to do it in a sim environment. So at the same time, people like to copy certain people and all that. So there's that we're looking into, because we want it to be responsible. Nobody should have out of the gate a ton of accounts that they're all paying whatever for, and then they lose them the very first day they're funded. That's horrific. That's not even the spirit of why we create the funding industry. Kind of just like, if you can't do it with one, you shouldn't do it with any. You shouldn't do it with any more than that. If you can't trade small, you can't trade with one lot. Don't add size. If you can't trade small, you can't trade big. It's always been something we were told on trading floor. If you can't trade small, you can't trade big. So learn how to do things small and then increase in it. So, but there are people that want to do that. So we're looking at that one. That should be something we announce fairly soon. We're going to continue to put pressure on the competitors out there, just because our program and what we're offering. Besides, we believe we see the how it's developing traders to into better traders with healthier habits. And that's really important to us. Is not selling FOMO and doing flash this, flash that, and all that. It's really getting here. How do you develop a person? Well, first, grab their hand and say, hey, I'm here to help. And we're gonna guide you this way, and this is a good path to do. And tune into this free educational source. And oh, by the way, we got group coaching that's free too. And we have a Discord community of traders helping other traders. We got Topstep TV during the day that you can tune in and be a fly on the wall, or participate in chat, and just get smarter and smarter and smarter each and every day. That's that filling up the think tank. So really leveraging Topstep TV is the other one, and Topstep X, the platform that I spoke about. And then some program stuff that we're going to do later this year, but I don't want to talk about those yet until I get a date on there. But I will follow up with you on what those are here soon.
Cool. Yeah, that's all really good updates. And I will back you 100% on the Topstep X platform being sick, because some of us have gotten that earlier access with the fire drills and so on and so forth. And the platform is sick. I love the time and sales feature. The tilt thing is super cool. So a lot of the lockout feature, like you mentioned, you can have personal daily loss limits in there. It's built to keep the trader safe. It's not, none of it is overly flashy. None of it is over like talking about like the reward side. Like you said, it's all based on risk preservation and keeping you trading for another day. So I love that. I love that. It's exciting. It's super cool to see you guys, not just still around, Mike, but you're growing. Like you guys have been around. You were around before FTMO was popular in the United States. You guys were like the OG. I remember seeing ads for this years ago before I even
Yeah.
got into day trading. So it is so cool to just not just
Well,
speak with you, but see it grow.
well, it's kind of funny is every FTMO, I know those guys over there, they're awesome. I talk to them probably every, I don't know, month. Um, they had been in Topstep's program, signed up. Because when new companies pop up, I'm like, oh, who's running them? And they've all probably in one shape or another either been in a practice account or been funded.
Yep.
I can see them and I can see their trading performance or whatever. And it's interesting because
Yeah.
when we first started, there was really nowhere, and you wanted to go test yourself out, and then you're like, oh, well, I'm going to spin off and try this on my own as well. So,
Yep. And that's cool. I mean, that's
uh-huh.
capitalism and it's flattering to
Yeah.
you as the OG, so it's cool. All right. So for the last couple of minutes, Mike, let me throw some quick ones at you. Can you give us like a trading story from the pit or from the initial days of Top Step that you haven't shared? Something juicy. I just love these stories, and I know my audience does too. So you got anything good for us to chew on?
Yeah, there's a couple. So one of them was this trader was getting crushed so bad. He was in the trading pit, big kind of I don't know, Jim Meathead type of guy, like big, like juiced out, swear to God, like huge. And he had
Okay.
been getting crushed and crushed and crushed in the markets. And you knew because it's a trading pit, you see the same traders every day. And unlike the screens, you actually see them and if they're putting on bad trades or good trades. So he was getting blown out taking heat on a trade one day, and he had kind of was on the path of getting blown out. Blown out means like you blow up your trading account and you put yourself in a hole, or it's really bad when you do that.
Yeah. Yeah.
So he got long. The markets were in free fall, and he turned bright red. He thought he was going to have a heart attack. Got out of his position and stabbed himself in the arm with a pen. His clerk goes to pull the pen out, and blood just starts shooting all over. So that was a wild story that happened right in front of
Oh
me.
my God, dude.
I
That's
think
crazy.
the pressure release of just having pain on pain was his boat. I don't know.
Can we get a
Never
number on
saw.
that? Do you know how much the loss was? Like how much was he
No,
losing here?
I never saw him. It was in the tens of thousands, if not hundreds. Uh,
Jeez.
you just don't know. And then there was a big fist mark in the drywall on the trading floor on your way out. That was from him. I never saw him again. I don't even know if he's alive anymore. But the other one is me when when the markets were dead, like completely dead. Like VIX was like trading 9, and it was like the markets would open up. There'd be a couple orders, and then it'd just be quiet and sideways all throughout the day. We'd sit down on the trading pit, and that's what's great about being other traders. You're like, hey, nobody's trading. I shouldn't be trading. The markets aren't moving. Everybody's, oh, okay, is how we should. So we used to play like Uno on the trading floor. And then if orders did come up, we would stand up in the trading because the market's really dead. Certain times of the year, they would get like that too, or go through really low vol times. So this is one of those times. But there was a broker that jumped up and he goes 87 bid, and I go sold. And I'm just sitting down like playing cards. He goes 87 bid. I'm like sold. And then he goes like that. He's like 300, and 300 in the Dow pit is that's the Dow futures pit. Dow
Okay.
minis for every one in the Dow pit is 2 in the mini. So I had 600 minis
Oh
on
my gosh.
instantly that I was short from the price of 87, and the market was quickly at 90. And I'm like, holy bananas, dude. I'm short 600, and I'm already 3 ticks or 3 points out of the money. And I haven't even started peeling these things off, which I'm going to take the market higher because the bids and offers are small. So long story short with that one, that was the scariest moment of my life. I was sitting there with my you'd be in here with your trading jacket on, all that kind of stuff. And I'm like, sold. And he's like 300. I'm like, so then you start to like take them off and work positions, and your hand is just shaking. It'd be like
Yeah,
this
dude.
shaking. And that was one of the scariest trading moments of my life, because I knew if the market popped 10 points, 20 points, and in the Dow, that was a piece of cake. 30
Easy.
points.
Right.
I'm
Right.
talking hundreds and hundreds of
Hundreds of
thousands
thousands. Right. Against you.
that I'd be out.
Yep.
And I was a 26-year-old kid, and I just got good footing going on my trading. Just paid off I had a $300,000 condo. I paid it off in cash. And I'm like, I knew like all that. And I'm like, well, I'm never going to come back to trading. So that always trade for tomorrow is a big thing. And it's a motto that we like to say, because don't let, and I made the mistake of saying sold. When you say sold, Austin, it means whatever you have, I'm going to take it. And I thought
All
it was
of it.
small, like I thought it was like, 87 bid 5, which would be a 5 lot. which would only be
No,
10 on, which would only be
no.
10. No, 300.
Oh my
And
God.
I
But
ended
you know
up
what that
losing.
teaches you too? It teaches you
Yeah.
that you could lose it all in one day, right? Like I bet you
Yep.
must have thought that at some point after that. Like, man,
Oh yeah.
I've been doing really well. I almost just gave it all back.
Yep. Yeah. Gave it all back plus some because again, remember your accounts can go debit in the future world of futures trading. So yeah, I ended up losing like 5 to 7 grand on that. And that was just you had to then mark that off as, hey, Michael, keep your mouth shut. And if you're going to do it next time, put a quantity on it. If you don't put a quantity on it, you just say sold, then they're going to stick you with all the 300. But if I would have said 10, then he would have been like 10. All right. 290 still here. Yeah.
Yeah, right. Okay.
Yeah.
So
That was
when
crazy.
that is crazy. And the Penn story is still crazy too. I mean, just to know that
That
like
one
that's the intensity of being on the floor. Somebody I heard recently
bananas.
say a story about like a guy that had a heart attack on the floor and they just walked over him as he's on the ground having this heart
Yeah.
attack because like the market doesn't stop. I mean, that's just and it might not be that dramatic in some sense, but it is. It's that intense there. It used to be, I should say, at least. It's crazy.
A guy, his initials, his acronym, mine was PTK for Patak. His is like WD something, Wood. We used to call him Woody. And, yeah, he might have been that guy if you heard a story, but there's a guy in the Dow pit at the time. Market was in free fall and he got long and he fell down and had a heart attack. And he had turned, you can see him right in the middle of the thing. The markets are in free fall down. He doesn't know what to do. He knows he's down a bazillion. And he falls, he turns completely white, and then boom, and nobody moved to help him out. They just go call the medics because like, what are you gonna do? And
Right.
everybody, it's during a volatile time, so everybody in the pit was there's either opportunity or they're taking heat or they're in the money or they're looking to put a position on. It's capitalism.
I was going to say somebody's taking that opportunity, bro. It's whether it's you or not is really the question. What were you doing during 9/11 and during the the '08 crash? You said you made a lot of money on the volatility there. So were you
Yeah.
same thing 9/11 downside volatility going crazy?
9/11 was a senior year in college. I got margin called in when the markets opened right back up. You know how they were shut down in New York
They were
for
shut
like
down
the
for a
rest of
couple
the
of
week.
days. Yep.
Yeah, and then I got margin called in the library of Iowa State on my last $30,000 trading account. I told you I lost 90 grand. The last one was I had a bunch of stocks on margin too. And I got margin called on that, liquidated everything. And that's when I had to sell my vending company to pay for that 30,000 because I had it as a line of credit against my inventory.
Yep.
So I came out of college broke, even though I had a great company when I was 16 and I lost it all to trading, but there was nothing more passionate I was about than trading. That's when I moved to Chicago. And
I was going to say, dude, I
sim.
can tell from your attitude that just made you want to be better. That did not make you want to.
I knew
Quitting
what I
was
wanted
never
to
even
do.
a thought. No, not even close. So when you make money based on like those volatile events like '08 and all that stuff, is there any advice you could give to the younger trader that sees like this past weekend, Israel and Iran and then everybody's like short, short, short. And then what did the futures market do Sunday night? They went up. So what would you speak on if the macro climate kind of right now with interest rates and inflation, how would you guide the younger guys to trading through all this uncertainty?
Well, again, let the market come to you, which means you got to be patient. What it comes to me is like, don't say it's going to do something. Like it's the market's already may have factored that in a bit, like over the weekend, this could, so yeah, but also again, being agile, open-minded, and flexible as a trader. It's just the guys that I've seen and girls that I've seen has been the best. They're growth minded. They're always growing and improving. And you're never done doing that unless you're done in the space. This is an this is a craft you're working on as long as you're in the game of trading, which I think I like calling it a game because I take games seriously and games also make it more fun. Yeah, I mean, that's a big piece of it.
I love that. Michael, it's been a great hour. I really appreciate you. We could keep going. I think we get along pretty well. So I think we could definitely have a part 2 here. So for the audience, if you listened all the way through, do me a favor, head to YouTube or shoot me an email. You guys know how to get a hold of me. Hit me with the questions that you want me to ask Michael next time we sit down, because I think there'll definitely be a follow-up, maybe even in Colorado. If I make it out there, I want to sit with Brian Shannon. He's out in your neck of the woods. I got a couple of guys I want to hit. So if I make it out there, we'll have to do one in person.
That'd be awesome. I love that.
We'll say when, not if. We'll say when, not if. But for everybody listening, yeah, exactly. We'll put the links for Topstep down below, and we'll make sure you guys are connected so you're up to date when Topstep X comes out and when all the fun, exciting things come from Michael and the team. So for now, we'll put a pin in it. Mike, thank you, man. I can't thank you enough. This was so much fun. Such great info, and always good to chat with a market veteran like yourself.
Austin, thanks for having me on, buddy.
Absolutely, man. Audience, thank you very much. Make sure you're subscribed, and we'll see you guys in the next one.